Another drop in China's stock market today after Monday's sell-off, the worst since 2007. Charlie Awdry joins me from London. He manages the China Opportunities Fund. Charlie, we did see stocks come off their worst levels, but do you expect the selling to continue through the week?
I think we can expect some pretty high volatility for the next months, to be honest. Short term, who knows whether it sort of goes up and down, but this is a correction that has been caused by some previous over-enthusiasm, and it's anyone's guess as to how big and how long that will be, but it's certainly more volatility ahead, yes.
So we could indeed see another 8% decline in a single day?
Oh, who knows? I don't know what share market would do in one day, but there is an issue that a lot of the market is still very expensive. The Shanghai market is dominated by retail investors. They tend to chase fashionable stocks up to high valuations. So if you do look at certain areas like technology in the Shanghai market, they're extremely expensive, and that part of the market could fall quite a lot. Other areas of the market actually are much better value. So I think we're going to see a lot of divergence within the market.
So where would you see value right now? And is it too early to start picking around to try to find some stocks to add to portfolios?
I think within the Shanghai market, I think the first place you want to start looking at is at large cap, high quality businesses, and particularly in the consumer staples area, where you get some more consistent profit growth, decent margins, good cash flows. But I think a more important point to make is that for overseas investors, access to that Shanghai market is extremely limited. They've actually linked up the Hong Kong and Shanghai markets recently, so access is easier, but most China funds are actually invested in China shares in Hong Kong, and their valuations are much more attractive, and there are lots of buying opportunities right at the moment.
But even here in the U.S., we have seen Chinese stocks listed in New York fall, mirroring what we're seeing in China overall. So my question would be, if we're going to have all this volatility, why not just stand back for a while and let the market sort itself out?
Oh, sure. I think it takes a very strong stomach to step up and buy some of these shares in the face of these headlines. And, years ago, China used to be a relatively simple, easy investment concept that people bought into. The issue we have now as China managers is that China is no longer easy, no longer simple, and you'll continue to see a lot of choppy news flow. But you raised US listed Chinese shares. I think that's a really interesting area, because actually you've seen a huge wave of privatization offers that really increased from June time. And this was really on the back of the sell-offs, where those shares actually are pretty cheap. They're much cheaper than the ones in Shanghai. So I think actually US listed Chinese shares look pretty attractive at the moment as a group.
Regulators in China have said they're going to boost efforts to support the market. They've been doing some of that. Is that going to help? Should more be done at this point?
I think it'll help over the short term. Over the long term, I think it is a bit of a problem. Investors in Asia and emerging markets are used to government stepping in and buying in the share markets. But traditionally or usually they do that at very depressed levels. I think the problem here is that China has been really actually quite positively following a path of reform for the last 2.5, 3 years, where they've talked about actually increasing the role of market-based pricing in their economy. Yet when their stock markets had an aggressive sell-off, they've stepped in and directly bought shares. So I think over the medium term, we have to reassess just how reform-minded they are. Because I think globally, people want to buy emerging markets that are reforming. And I think this is a backward step with regard to financial reform.
Charlie Awdry of the China Opportunities Fund, thank you so much for your time.
Thank you.
I'm Rhonda Schaffler for The Street.